Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so in this video, I was actually not really going to do it, but I was putting some screenshots together for this post on X, really just kind of discovering the data myself, working it out, trying to understand it. And I thought I'd break it down for you guys. And so this is going to be on Intel, ticker symbol INTC. And so I'm just going to read you what I have here as I go through the screenshots that I've posted, because I have talked about Intel, suggesting that the data does look pretty bullish, but the past couple days it hasn't really looked that great. But I've also talked about how sometimes when you see a move or some bullish trending, whether bearish or bullish, maybe the day after, you might see the exact opposite happen. And that's to kind of shake us out of positions. So we lose our confidence, we lose our conviction. And yeah, so I think this is really interesting. Maybe it means it's going to be, seeing some rip your face off rally type stuff. Maybe not, though. I don't really know, but I just think it's interesting and I wanted to share. Like I said, I wasn't going to make this video, but I thought I might as well. So editing's going to be bad. Probably the thumbnail's going to suck. But really, the videos just don't get many views lately. And I actually find this kind of exploration to be more valuable for me. And the videos that I find to be more valuable for you guys don't get viewed. So hopefully this is useful for you guys. But yeah, I am just going to read through this text on my screen, going over the screenshots over here. So, the thing that stood out to me, I was just going through the different stocks that I have in my watch list on Unusual Whales, and this stood out to me. And what that is the net call premium here being at around $14.5 million for today, July 8th. The market has closed. This is a really big move to the upside. I was actually going to post something around here earlier in the day when I was at work, but I also saw that net put premium was also up. And so I wasn't really too sure, but just relatively speaking, the net put premium, while it might be up by $2 million, it's pretty flat relative to the net call premium, this big jump up here, with that total being, like I said, about $14.5 million. And from this chart, what really stands out to me, what I like about it, whether it's the calls or the puts, when you have these big moves up here, that suggests that there's bigger buyers or sellers. And so this increase in net put premium could actually be the selling of puts. So it could be bullish. We don't really know. And actually, when we do see this spike up here in the net put premium, we do see this kind of pullback here. I'm actually just going to make sure that Ed's not blocking. Yeah, okay, he's not in the way there, so that's good. But we do see the volume drop down here, so that could be suggesting, again, over here where this spikes up, volume drops down. That could be suggesting that these puts are being sold even though the premium is going up, because maybe they're, trying to get out of their short positions because of what's coming. And so what was coming, or what did come, was this big spike up here in net call premium. So it was around, just looking at the y-axis over here, around $6 million. And then it spiked up to around $12 million. Ended the day, like I said, up $14.5 million. And so this suggests to me a really big order, maybe something very, very big going on. So very exciting there. And so just reading what I had written corresponding with this screenshot, wow, Intel had a $14.47 million increase in net call premium, or NCP, today, being July 8th, with a big jump up at around 1:30 in the afternoon, corresponding with a call. And so that call, if I go over to the next image that I have here, because we see this big spike in premium, this first candle being worth around $4 million, this second one being just shy of $3 million. So combined, that's an increase of around $7 million. So half of the premium for the day as far as the increase in net call premium. So that is pretty impressive. And you can even see it up here, premium for this contract, the $24 call that expires in March. So about 255 days from now, the premium did increase at over the course of the day by about $7.5 million. Actually, not increase, I should say. There was about $7.5 million traded in premium on this contract today. Some of it was selling, I imagine. Some of it was buying, I imagine. But this makes me think the majority of it was likely buying, and I'll also get into my justification for that as I do continue to read, what I wrote on X. And so this does correspond with, I wrote corresponding with the $24 call expiring in March of 2026, representing about $7 million with both of those candles combined. So the big question that I write on X is, were the contracts bought, which would be bullish, or were they sold, which would be bearish? And so if we look at the same screenshot at today's open interest, it was only 58. Very small amount of interest being open. So only 58 contracts were open, or only 58 positions were open in this contract, the $24 call that expires in March, at the start of the day. But over the course of the day, volume traded was 18,886 contracts. So that's pretty big. It's not just, like double the open interest or something like that. It is thousands, more. That is very impressive. Or maybe I should say, thousands more. Let's see, what did I continue to write? I did, let's see, I'll maybe just escape this for a second because, I just read that, got the big eyes and the exclamation point. And so I will have to check back at that contract in the morning to see what the updated open interest is. So going back to this image with it at the start of today, the 8th, being at 58, and the volume being nearly 19,000, I suspect open interest is going to be a lot higher, suggesting that there was a lot of buying of these contracts. And even though the stock price is, up a lot today, and let's actually look over at the chart. Let's see, I'm just gonna, right over here. Yeah, Intel went up 7.23% today, closing at $23.59. So even with this massive move up, it does still seem to suggest some bullish stuff going on. So if I do continue on with what I wrote on X, so to put today's increase in net call premium, so that would be coming back to this, that increase in $14.47 million, to put that into perspective, we can look back at the prior 30 trading days. And so that's just going to be the third screenshot that I have here. And so what we can see, let's see, this is filtered by 30 days up here. You can see that. And so we've got, over 13 million being 14.47 million today, as I've mentioned many times. The last time that we saw premium close to this high was over here on June, 6th, 7th, 8th, somewhere around there, where we saw a net call premium of around $9 million. So it was pretty high then, but not as high as it was today. What happened following that? We did get a pullback in the stock price, which is marked in yellow. But then that did bounce, and then the stock price did go higher. It is higher now. And that net call premium the net call premium, the stock price is higher now. And the net call premium today, is higher than it was over there. So that also, sparks my attention that this is a pretty exciting move. And so then continuing on with my post on X, I say that max pain for this week is $22. So that's saying that, as far as calls and puts go, there are calls, at a variety of strikes. There are puts at a variety of strikes. And the maximum pain for those contract holders would be for the stock to close at $22 a share on this Friday, on July 11th, because that's maximum pain, because the maximum amount of puts would be closing out of the money, being at or above $22. And the maximum amount of calls would be closing out of the money, with this being at $22 or below. So that's kind of, meeting in the middle, maximum pain for people betting long and short with calls and puts. Maximum pain is $22. Well, the stock price, as I had mentioned, if we do look over here, is, multiple strikes above. And so if we just look at the options table here, this is calls for July 11th, we can see that the $22 strike is right here. Current price at $23.59, or at the closing price, I should say, is multiple strikes above that $22 strike, because they go in 50-cent increments. So $22.50, $23, $23.50, and we're above that one. So all of these here are in the money, whereas the ones above are out of the money. They will be expiring worthless if we are closing, at this price on Friday. And so what we can see is kind of like the idea of where that max pain at 22 comes from. We can see that, the open interest right here, this column, I guess, it's not going to be, I'm not exactly sure. I mean, I don't know how to calculate max pain, to be completely honest. I just look at the table, whatever it tells me. But that's just like you're going to have the majority of these calls closing out of the money versus the minority closing in the money. Or the majority of these above, closing out of the money, because what's below here is in the money. And so this, add up all of this open interest, this should equal approximately all of this, coming down to like 22. But that's changing every day, and I'm not going to get into that because this video is probably going to be too long and people are probably not going to watch it all the way. But the thing that I do continue on in my post on X is that while the stock price, like I mentioned, is multiple strikes above $23.50, the next time max pain is at the money, or ATM, is September 19th at $23 over there. So this makes me think that we could be in gamma ramp or gamma squeeze type territory, because if price continues to go up, even after today, these max pains are going to have to be pushed higher as, people go longer, they go more bullish, less bearish, so these max pains will go up. And as those max pains go up, if the stock price also goes up, it's just going to be kind of like this, I'm not sure of the mechanics of it exactly, but it's basically like, market makers have to hedge all of these contracts closing in the money. They need to have the shares to cover them. And so as price goes up, max pain goes up. And if price goes up, max pain goes up. And the more max pain goes up, the more market makers have to hedge, and so on and so on and so on. And with max pain for the next, couple months, being well below, multiple strikes below current price, that could be triggering a gamma ramp, but that doesn't mean that it's going to last for multiple months. It could just last for this week. It could just last for a month, and then max pains catch up to price, and it kind of rolls over. But it also could, be the top right now, just like we saw this big spike in net call premium here. Right after, we saw the stock price in yellow come down. So we could see the stock price come down again after this big move that we've seen today. So it's very good to be cautious of that, but it's also very interesting. I wasn't really thinking about this, but there is that gap up there at 28.87. it is quite possible that in the coming weeks, we could be seeing a pretty massive move up to around $29, $30, or maybe just going up a little bit higher than $23.59, maybe getting up to 25. And I should also note, oops, sorry about that. I should also note over here that, there have been multiple attempts to get up to fill that gap at 28.87. And so I would say that 26 here, right where the cursor is, we have the intersection of the tops over here as well as over here and here. So 26 is likely to be some resistance. And if we don't even go that high, like if we just come to the top over here, that's around 24.50. The cursor is at 24.66. It's about $1 higher than where price is currently at. So we could be bumping into some resistance there. So just because the net call premium does make me think that this is looking pretty bullish, doesn't mean it's going to continue to go. It could be a fake out, or it could just be, the market shaking us out, getting us to lose confidence before the gap does get filled. But before we do get there, we could be finding some resistance in the $24 to $25 range, maybe around $26. So do look for strength if we get to around, just about 50 cents higher to around 24, between 24 and 26. We want to see a lot of strength. Even though, we saw that over here on, let's see, February 18th, we hit a high of 27.55, but just after that, it started to roll over. So very good to be cautious of that, even if, this was a 16.06% day. That's a pretty massive move. I would say that the 7.23% that we saw today was a pretty massive move. But once we start getting into the double digits percentage moves, we really need to see some closes above these prior highs. And so this high over here from February 18th was 27.55. So we need to be seeing us closing above that level to really suggest that this consolidation down here has then flipped to support if we do break higher. As of right now, if I just draw a very casual trend line here, very casual. It does, I don't even know how I was going to draw this. It does, I don't want to draw, let's see, this one here, very casual. I am sorry. But yeah, I don't know. I don't know what I'm doing with this. This is very impromptu, and I'm not doing this in a very convincing or compelling way. But yeah, we just have, all of this, resistance here. I'm just going to hold the shift so it's a horizontal line, and that is going to be, like I said, around 26.50. So keep that in mind, but I think really getting up to like 24 to 26 to 27, we need to be showing some strength to break above and then find this white line as support before, we really can continue on. But like I said, that white line, what I really mean is the, high over here. We need to get a close above 27.55 to suggest that this would then be acting as support. So if we do get a pullback to this white line, it would be more likely to be acting as support. So I think really good to be prepared for this to be pulling back. But yeah, I just wanted to share this post that I put out on X in case it's helpful for you guys. It's helpful for me, and I am just trying to, not be chasing stuff, looking at data, trying to understand it and seeing where it takes us. And by the way, if any of you guys are holding Unity software, pretty exciting. I have been trimming a little bit the past couple of days, but a very small amount. I am looking forward to seeing it go higher, but also trying to manage risk. And so hopefully this was helpful for you guys. As always, those are just my thoughts. If you found it helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more random videos like this where I go over posts on X, stuff like that. Have a great evening. I'll see you guys in the next one. Take care.